Okay, payroll. How many of you have done payroll? Well, a couple. How many of you have gotten a payroll check? There you go. Okay. So when you get a payroll check, let's say, most jobs they pay you by the hour, right? You earn $10 an hour, you work for 8 hours. How much money do you take home? Nothing. Okay. They're supposed to pay you $80, right? 8 hours times $10 an hour is $80. That's what's called gross wages. Okay? Then there's a bunch of taxes that come along, and they take money out of your check, and they list what all those taxes are, and that's what we're going to talk about tonight. So you end up getting to take home, I don't know, 50 or 60 bucks, probably. Now, my story for the night is very quick and simple. I had an intern once, hired this guy, senior, going to school at a college here in the state, accounting major, supposedly really, really bright, comes to work for me, works for the first couple weeks, gets his first paycheck, and he comes in and he goes, "My check's not right." I go, "Why not?" "Well, it's not right." "Well, put it down, let's look. Show me where it's not right." "Well, I made $80, whatever it was, right? 8 times 10, I made 80 bucks. Who's this FICA guy, and why has he got all my money?" I mean, hang on a second. You're going to graduate, right? Literally, who's FICA? Why'd you get all my money? Okay, so we're going to cover what the major payroll tax laws are. Good? All right. Okay, this is something we should cover. Has anyone here ever been an independent contractor? There you go. Okay, an employee works for an employer. An independent contractor comes in and does a project for an employer. You get paid for completing the project. So an employee can be told, you must show up at 8 o'clock, you go to lunch at 12, you come back at 12:30, and you go home at 4:30. Okay? An independent contractor works when they want to work and doesn't work when they want to work. They just have to get the project done. An employee, the employer will give you a computer, a desk, a place to work. An independent contractor, they give you nothing. You got to have your own stuff, your own tools. So that's the difference. As an independent contractor, you're responsible for paying all those taxes that we were just talking about, that FICA guy. Okay? As an employee, the employer takes it out of your check. Yeah, we're going to kind of work through this. You guys are going to read the book anyway. So here's the key. Generally, the rule of thumb is if you work more than 40 hours in a week, you get what's called overtime. Overtime, unless otherwise defined, is 1.5 times your regular rate of pay. So if you earn $10 an hour and you're getting overtime, how much are you getting paid per hour? 15 bucks. Good. Everybody's got the math down.
Are you going to agree with the state of California is different?
California is different. I'm not teaching an HR class. We're skipping it. We'd be here for weeks. Social Security. Everybody knows what Social Security is, right? Yep. Okay. No, only one guy says yep?
Yes.
Okay. Social Security was set up in 1934. And they take money out of your check and they put it aside so that when you retire you have kind of a safety net so that you're going to get at least something, right? It's not designed to be enough for you to retire on. It's just something. Okay? They take your gross wages and they multiply it by a rate. I'm going to call it a tax rate because it behaves like a tax. They don't tax all of your earnings. If you earn over a certain amount, they stop taking it out for that year. And every year it starts over again, okay? So there's what's called an earnings base. A lot of these payroll taxes have an earnings base. The This is some old information. They came out with a new edition of the book last year, but they didn't update the slides or the book for the tax rates. This one happens to be the same though. So even today, Social Security, they take 6.2% of your gross wages and they take it out of your check. And the money goes to the federal government. The tax base in 2007 was $97,500. For 2014, I think it's $116,000. I think. It goes up every year. So they tax you on more and more of your earnings. Most people don't go over that, so it's kind of a moot point. This amount can fluctuate, but it hasn't in 2 decades, 20 years or so? I'm trying to remember. Yeah, the earnings base, they change every year. It goes up and up and up. Okay? Medicare, another tax they charge you for. Medicare is what they take out to cover your retirement medical expenses, your Medicare expenses when you retire, okay? I can't even say it, but that's what it is. This is rate times your earnings. There is no floor on this. There's no wage base. It's 1.45% of every dollar you earn. Okay? So between the two, 6.2% and 1.45, they get you for 7.65%.
So it's both those amounts taken off the gross?
Off the gross.
Wow.
It's a lot. Here's the scary part. You're paying 7.65% and your employer matches it. They're getting 15%.
And it's going to go up.
And it just keeps going up.
And they say it's running out of money.
They're getting 15%. Okay? And there's no wage limit on the Medicare. Okay? As we know, as we've heard mentioned earlier, the state of California has some taxes as well that the employer is required to take out of your check. There's SDI, what other state? California state income tax.
SUI.
What?
SDI is
Unemployment, SUI. There's several of them.
With pensions.
They behave the same way as these, so we're not going to memorize all of them. We're going to keep it simple. So we're just going to use a few examples. There's another big one. How many of you fill out a tax return every year? Usually in April, right? They take money out of every check for your federal income tax. They don't want to wait until April to get your money for last year. They take it out every time you get paid. They get the money up front. Then it's up to you to file a tax return and figure out if you get any of it back, right? Or if you owe them more money. So think about it. They get to take money out of your check all year long, and maybe you'll get it back in April of next year. What is that called?
Free loan.
An interest-free loan. That's exactly right. Okay? So do you really want to get a big refund? No. Okay? You want to try and keep it pretty close to zero. All right. Employers are required by law to withhold all of these taxes from you. You never actually get the money. That's why your gross amount is $80 and you only get to take home about 60 of it, right? In our example from earlier. Employers, like I said, match your Social Security and Medicare tax. They're paying in the same amount. And there's some taxes that employers pay that don't get taken out of your check, that you don't even know about. You're about to know. Employers pay a federal unemployment tax, a state unemployment tax. This is really behaves like a tax, but it's not. Anybody know what workers' compensation insurance is? Okay. Employers are required by law to buy insurance that covers employee medical and other expenses if they get hurt working. Okay? This is required by law. They're forcing you to buy insurance. It's way expensive. It gets way abused. It's poorly run. It's got all kinds of problems. It's better than nothing. But, you know, It's way expensive, but it's required by law. You have to do it. Don't anybody raise your hand and say, I know somebody who doesn't do it, because I don't want to know. Okay? I don't.
There's a big fine if you're not doing it, right?
Oh yeah, you get in a lot of trouble. Okay.
Even if you have a domestic help.
Yeah.
There's
Yeah.
the law.
Yeah, there's all kinds. Federal unemployment tax, there's all kinds of acronyms that are going to pop up here. FUTA, federal unemployment tax. State unemployment tax, SUTA. Okay? And they have their own earnings base. FUTA and SUTA, their earnings base has been $7,000, the first $7,000 of wages for each employee. So as soon as you earn $7,000, then they stop having to pay those taxes. Okay?
That's including the state?
Yeah. They're both $7,000 currently. We talked about workers' comp, it's insurance, blah, 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 blah. Yes? Yes, no, maybe. It's required by law. Oh, records that employers are required to keep. How many of you are going to go on and take my Accounting 6 class? Good. I do a project in that, and we use Excel to do payroll. So all of this stuff pops back up in Accounting 6. And they're about to get handed that project Wednesday night. The gal that's in that class isn't here. They're going to get that project Wednesday night, so I'm going to get to explain all this again Wednesday night. So the government requires employers to maintain information on their employees. Name, address, social security number. One of the things that drives how much income tax you pay is if you're single or married and how many dependents you have, right? If you have a bunch of kids, you pay less tax than if you have fewer kids or no kids, right? So your employer is required to keep track of all of that stuff. And then they have to use your marital status and your number of dependents when they calculate your income tax to calculate the correct amount for your ending check. Your net check. Ending check, right. They also have to track how many hours you work each day. And they have to track how much was paid for regular and overtime. Right? We talked about that earlier. Regular is the first 40 hours. Overtime is how much overtime you work after that. Okay? Anybody know what a salaried employee is? There you go. Tell me what that means.
That means I get paid a certain dollar amount for the year split by 24 payments and no overtime. I work 50, 60 hours and I get paid the same amount.
Or if you're smart, you figure out how to do your job in about 25 hours.
I have paid holidays. I have paid vacation time.
Yes. So if you're an hourly employee, say you make $10 an hour. If you work 6 hours today, you made $60. If you're a salaried employee, you get paid $4,000 a month or whatever it is, $2,000 a month. So for the whole month, if there's 30 days, you get paid $2,000. If there's 31 days, you get paid $2,000. If there's 28 days...
If I go into work for an hour and I go home, I get paid the rest of the day.
Nope, it's a 2-hour minimum requirement. Check your HR people. If they're letting you slide on that.
But I'm exempt, I'm an officer, so I just have to show up and leave.
I think you got to hit 2 hours, but I could be wrong. We'll let somebody else argue over that. Okay.
Also, if you work 10 hours in a day, that's...
You don't get paid overtime. Yeah. If you work 10 hours in a day, you don't get paid overtime. Right.
No, I mean hourly.
If you're hourly and you work 10 hours a day,
You get 2 hours of overtime.
you get 2 hours of overtime.
It doesn't matter about the 40 hours. Unless
Hang on. Now we're venturing off into California law. Let's not go there, okay? Because it just complicates the heck out of things. Well, it does. I haven't looked this statistic up in a number of years, but California is a very pro-employee state. Last time I looked, there's 6,000 and something employment laws in California. In Texas, there's 503. Okay? So you can see the level of knowledge required to operate in either state, right? So let's let's just do a quick example, because she was bringing this up. If you get $10 an hour is what you earn, and you work 6 hours, right? 6 times 10, you get 60 bucks. Everybody sees that. Good? If you get $10 an hour and you work 10 hours in a day, is it 100 bucks? No. It's 8 times 10, 80 bucks, and 2 times 15, because it's time and a half. 30 bucks, 80 plus 30 is $110. That's how the calculation works. Good? Everybody with me? Any questions? All right. At the end of the year, everybody's had a job, right? They send you a W-2 form. And on the W-2 form, it tells you, here's how much money you earned all year. Here's how much tax we withheld from you for federal tax, for Social Security, for Medicare, for state of California tax. They tell you all that. So they have to track what your cumulative earnings and deductions are all the way during the year, every time you get paid. Good? Simple. And the Medicare and Social Security, which I just talked about. Boring. Oh, here's the other one. They're required to have you show proof that you're a United States citizen or you have a valid work permit. Yeah, fill out the I-9 form and keep it. Okay?
Are you going to have also the new laws have accrued vacation time on the statement?
Oh yeah, and they want to know how much that if you get health insurance, how much the value is of that, so they can tax that too.
Yeah.
That's coming.
For companies over 250.
And they're going to tax your accrued vacation. Yeah.
Yes.
Okay? But that's later. They don't have to memorize this. Yes?
Isn't health insurance, isn't that like a section 125 exemption?
If your company sets up a 125 plan, you can pay the employee's share of it through a 125 plan. However, under the Affordable Care Act, and companies now have to report how much they pay for your health insurance on your W-2 so that the government can look at you and go, you're getting a $12,000 a year benefit. We should maybe tax you for that. That's what's coming. I'll bet you money. No more free lunch. Yeah. They've just committed to spending a tremendous amount of money. They got to get it from somewhere. Okay. That's the basics. Here's how to calculate it. We're going to use a tool called a Payroll Register to calculate payroll. Okay? Payroll Register contains some basic information before you even start doing the calculations. The employee's name, the date, how much they get paid, either hourly or salary. Or anybody here get paid on commission? No? Okay. Sometimes, if you're a salesperson, they'll pay you 3% of gross sales or 1% or whatever it is as a commission. So you don't get paid an hourly rate or a salary rate. They'll pay you based on that commission. Or a piece rate. For every thing you put together, I'll pay you $1. So if you put together 1,000 things, you get $1,000. So that's called piece rate. Oh, there's piece rate. So that's where you start with your payroll register is employee name, pay period, and the information you need to know. How much is their salary or hourly rate? How many hours did they work? And then you can start doing the math. So this guy worked 40 hours, this gal worked 40 hours, $10 an hour, $400, right? No overtime, it's simple. This guy makes $950. Do the math. They're going to show us how to calculate overtime here. Right? Here's a guy that worked 45 hours. Same thing I just did over here. Everybody's comfortable with that? Is anyone not comfortable with that? moving on. Yes, federal law requires them to take all that money from your check. Do the companies get to keep it? Nope. They owe it to somebody else, right? Social Security, Medicare, federal income tax withholding, state income tax withholding, and some other state of California fun stuff. Tax-exempt wages. What a misnomer that is. You're paying tax on it somewhere. But remember, there's a wage base for each of these items. So the book still has the old amount. So for FICA, as soon as you earn more than $97,000 in a year, they quit calculating FICA tax on that. Remember that the employer matches the FICA and the Medicare tax. Okay? We've already seen this. The Medicare tax is 1.45%. Is there a wage limit? No wage limit on the Medicare, right? Okay. If I throw anything like this at you in a test problem, I'll tell you what the wage limits are. I won't make you memorize them, because they change all the time. I don't want you memorizing one from 2007. That's for darn sure. Right? Okay. So this section of the payroll register, you have gross pay times the tax rate. You list the Medicare tax in that column, so you have a column for Medicare tax. Federal withholding. Here's the one that's a little interesting. Your income tax is dependent upon how much you earn, how often you get paid. Do you get paid weekly? Do you get paid every 2 weeks? Do you get paid once a month? Right? Are you married? Are you single? And how many deductions you claim or withholding allowances. Right? Do you claim your dog? Do you claim your cat? Do you claim the goldfish? Well, when you fill out your W-4, when you fill out the W-4 form, you can claim the dog, cat, and the goldfish. But on your tax return, you can't, because they don't have Social Security numbers. So it will come bite you in the behind sooner or later, right? Okay. Theoretically, you claim a deduction for yourself, for your spouse, and for each kid, each dependent. Okay? However, if you end up owing a lot of tax at the end of the year, you don't have to claim the right number. You can claim more or less to get your tax to be zero on that tax return at the end of the year. On the tax return, you're required to use the exact correct information. But when you fill out your withholding allowances with your employer, you're allowed to guesstimate to try and get your tax to come out to zero due when you file your tax return. Okay? Just if you end up owing more than $500 at the end, you do get a little penalty. If they owe you more than $500, no penalty. Interest free. If you owe them $501, penalty, interest.
How much is the penalty?
It depends on how much you own. Okay?
There's a tier now.
Yeah. Okay? What did it say? Okay. So the more withholding allowances you get, the less tax they're going to take out of your check. They leave more for you. Everybody's has a job, right? Everybody raised their hand. I've gotten a paycheck. You filled one of these W-4s out.
Yep.
Yep. You've all done it. You filled out an I-9 probably too. Okay? So the way we're going to do this, if you do payroll with a computer, the computer has a formula in it and it'll calculate the federal tax and the state tax. When you do it manually, it's a little bit more involved. We look these things up in a table. And there's an example of a table in your book on page 337. Okay? These come from the government in something called a Circular E, a little booklet that they publish every year. Here's an example of the table. The biggest challenge on the tax tables is getting the right table. Okay? Let me explain that. Here's the table for married people. Okay? I have a 50-50 shot here, right? Married or not married. So this guy better be married. Now, here's where it gets convoluted. Do they get paid every week? Yes, then this is the right table. Do they get paid every 2 weeks? No, this is the wrong table. Do they get paid every month? No, this is the wrong table. Do they get paid bi-weekly or 26 times a year? So there's 4 different married tables that you could go look up. Okay? So correspondingly, there are 4 different single tables that you could have to go look up. So you can see getting the right table is a chore. After that, it gets a little bit easier. For example, you've got an employee, he gets paid $551 for this week. So what you do is you come over and you find his wages in the first column. It has to be at least this amount, but less than. So the amount has to be between these two. So if he made, what did I say, 551? So is it between 540 and 550? No. Is it between 550 and 560? Yes. So we're on this line here in my example. And then you go, how many withholding allowances? How many deductions did he claim? So let's say this guy claimed 4. The first column is 0, 1, 2, 3, 4. How much federal tax would we withhold from this guy's check? $16, right? So 551 minus 16, we're partway there. Now we can calculate the federal and the Medicare, or the FICA and the Medicare, and we're partway to calculating his net check, right? Notice, you could actually claim 0. You don't even claim yourself as a deduction or an exemption. Right? And notice, the fewer you claim, the more they take out. Yes?
So the charges, if you make more than 600, it just keeps going and going?
Yeah, these things are pages and pages and pages long. Okay? So you just come down, if you made $1,200, you come down and find $1,200 and work your way across. You know, if you claim 8 or 10 exemptions, you know, it can be very small withholding. Good? Okay. Go to the table, look it up. Yes. Blah, blah, blah. Here we go. The state tables look identical. Yep, the state of California requires employers to withhold taxes. Unemployment tax. California has a state unemployment, a SUTA, that the employer pays, and an SDI, state disability, which you pay. Okay? They're calculated the same way as what we did with the FICA or the federal withholding. Nothing tricky going on there. Okay, there are other things called voluntary deductions. Anybody have voluntary deductions at work? Yes. What are they?
401k?
401k, if you're putting money away for retirement. What else?
Charity?
Yeah, if you're donating money to Red Cross or somebody like that.
Cafeteria plans?
Cafeteria plan. There's your 125 plan to pay for your health care. What else?
Life insurance?
Life insurance. Or, you know, employers typically make you pay for part of your medical insurance as well. So, life insurance, medical, retirement plan, savings plan, yeah. Stocks, if you want to buy company stock, they'll sometimes set it up for you. If you borrow money from your employer, okay. Oh, there's a fun one, union dues. Is that voluntary? No. But it's called a voluntary deduction. Questions? I'm going kind of quick. Questions? Anybody? Stop me? Okay. We're getting close here. Here's the beginning of a payroll register. Employee name, number of allowances, marital status. Here's all the things I need to know, right? Yes?
Why is it bracketing?
They're just highlighting this and talking about pieces of information. This is static. These aren't going to change. Okay? Neither is your pay rate really going to change. But what will be different on every payroll register? Cumulative earnings. This is your year-to-date earnings prior to today's payday, before I calculate this. And I need to know that. Why? In case you're over the wage base, right? So I need to fill in, here's what you've been paid year-to-date to figure out if you're over the wage base. And the number of hours that you work may change from pay period to pay period. But the red ones are static, pretty static. Good? So once I get this done, then I can start calculating the rest of the data.
Excuse me, you can change your number of allowances anytime during the year.
Anytime. So that's why I said it's pretty static. People don't change them every pay period. But you can if you want. Okay? So, yeah, we talked about the cumulative column. The second part, notice it doesn't all fit on the slide. This is one long piece of paper. So we're just sliding over. The next column would be how much of your wages, did we calculate the, okay, this is missing a column where you calculate the gross wages. You'd need to calculate gross wages from your hours times your rate, right? Then you can sit down and go, how much of the wages are actually taxable for Social Security or Medicare? Remember, this is no limit, so this is all of it. But let's see, is anybody over the Social Security limit? No. FUTA, remember, was on the first 7,000. Is anybody over the FUTA limit? No. This must be one of the first payrolls of the year. Oh, it is. Right? People tend to go over the 7,000. So once you calculate the taxable wages, you then start taking those amounts times the rates, and you fill in the Social Security tax, the Medicare tax, the FUTA tax, which isn't on the slide, the limitations of it, Social Security, Medicare, income tax, and then all the voluntary deductions. Okay? Do the employees pay the FUTA? No. That's why it didn't show up there, because it's not deducted from the employee's check. But the income tax sure is. Now notice one thing that's going on as we go through this. All of these columns are totaled. Why might I be doing that? Did I erase all my other? Remember the special journals we had? We would total, and then we would take those totals and post them to the general ledger. Okay, what are we setting ourselves up for here? Posting this straight to the general ledger, right? So in essence, this becomes another special journal. Okay, so if you take everything that happened, take your gross wages, subtract your Social Security, Medicare, your federal unemployment tax, your voluntary deductions, you can calculate the net amount of the check. This is what you get to take home. So this gal's gross amount was $400. She takes home $350.40. And when we write the check, we can write in the check number. And if you have a bunch of different departments and you're posting this to different GL accounts as the expense for each department, you can plug in, notice the gross, this is the gross amount, right? Net was $350. The gross wages were $400. I want to know what my payroll expense was for the shipping guys versus the office people. So you put them in different columns. Okay? If you had truck drivers, you'd have another column, right? If you tracked your forklift drivers separately, there'd be another column. Good? And all those things side by side is a payroll register. And I'm going to answer questions to that point. Okay. No. This is because I have to cover it because we're out of time. This is not on next week's test. Okay?
Because it's online or in class?
You can stop.